The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. The Dow is up 90 at 60,130 and the S&P's up 755 at 1836. You've got the comp index up 15 at 4,253. You've got the cyclical index starting to move quite nicely. This is very interesting. You've got the GLD up 50 cents at 126.77. Yet, earlier on, the gold contract itself was down about $5 to $6 at 13.14. Silver is down just a tad at at 21.71. High-grade copper is at 3.28, still stuck in the trading range. Dollar is up 14 cents at 80.28 on the on the dollar index. And this is what I'm looking at. The power of the Chapman wave. Remember, the Chapman wave is the waveform that never sleeps. I've been talking about this as long as I've been here at TFNN. This is over 11 years. Oh, wait a minute, March. Oh, another week or two, and it'll be going in for my 12th year, I believe. Yeah. Whoa, time flies, huh? And even more important than that, I've always been discussing the Chapman wave, a methodology that's robust. You've seen it here. You've seen it in action. Many of you are using the Chapman wave methodology. Yes, I will be doing a Master Trader series at some time fairly soon. I'm just trying to set up the date. It's been a little complicated. A bunch of things have been going on. So the actual date itself has been moved around. But yes, the power of the Chapman wave to identify the lowest low bar and then merely to count each successive peak, the naked chart, I call it. Look, right here in front of you, the 10-minute E-mini. It double bottoms. It goes right down to the 18.50 area. Starts a peak A, goes to a B, goes to a C, goes to a D. What is the objective in the Chapman wave? To get you to at least a D, and then you've got to be careful. That's not where it necessarily means you're going to have a big sell-off, but that's where it most often happens. Whoa, sell-off indeed. It goes from 1825.75 at 10 minutes to 6 Eastern time this morning, and then it comes plunging down, and it goes down. No, I shouldn't say plunging. It pulls back quite sharply to 1819 at 20 to 8. Then it goes to peak A, B. Well, it was E/B. There was a question of that very sharp pullback. Was that a right arm extension? No, that candle right there said, don't think of it. That is a C, and we are going to go to a D. We are in leg D in the 10-minute chart. I call it the naked chart. Is there a single moving average? Let me even get rid of this line here. There is nothing but candlesticks. Could I have had something else besides candlesticks? You could have had bars. Why? Because the only thing I look for are higher highs and lower lows. Count the peaks, count the troughs. The Chapman wave is the waveform that never sleeps. So here we are. Where are we? We're now up 875 at 1834. All those that were looking for a major smash to the downside are saying, hey, what happened? Just as I said yesterday, I was shocked that there was that big spike to the upside when I was expecting at least a bit of a pullback. And then what happened? It spiked up and then pulled back. Now, I'd said to my subscribers on my opening call this morning, where we are only long, we do not have any short positions, I'd said we did take a tiny little loss, 15 cents, because I just didn't want to mess around with the particular stock, which was acting really well and then just didn't act well into the close yesterday and early this morning. I can always get back in. I'm just not interested in taking losses right now. Tiny little things, yes, but I just want to I just cannot, in the opening call, that's my daily service, I do not like to sit with losses of 15%, 20%, 30%. Some people even sit with a 40% loss, and they wait for it to come back. I find that I'd rather be looking for a new buy signal to trade that to the upside than to be sitting there, even if it comes back, and even if it comes back. Now, I say that for my subscribers. Once in a while, as I did fairly recently, I held on to a position that I bought more as an insurance policy, even though it went against me. But that was my plan. My plan was to buy it regardless of where it went because I knew it was going to skyrocket way above my entry point, which it did. That is a completely different conception, a completely different perception of money management because it's done for specific reasons. So let me just do this. I'm looking at the E-minis, and I don't see any way that it's going to get above 1844.50 today, even though stochastics at 93% and the MACD is still strong, maybe tomorrow, but not today. I'd be really shocked if that happens, although certainly there could be a very sharp squeeze because on CNBC, everyone was looking for quite a pullback here, and I just, not everyone, a lot of people. The perma bulls are always the perma bull, but I'm talking about those folks that are adaptable and are able to trade. They were looking for some deeper pullback. I don't see that as a deeper pullback. I think it's time. I'm suspecting by Monday, the latest Tuesday, we're making new recovery. I might be wrong, but that's the analysis that I've done. So let me just do a couple of things here. One is I want you to show the 120-minute chart made the arch formation in the E-mini. It did a rogue wave spike to the 1844.50 level, and that was yesterday morning, concluded at noon. And then you saw that sharp sell. It really was a sharp sell. But I said to myself, wait a minute. For the volatility index, the VIX, to suddenly turn around and go from the day before, it was in the 1370s, to suddenly spike to the 1573 level, the UVXY, which I know many of you, some of you emailed me to say you had that. I couldn't believe 6 points to the upside. Now it's down 4%. I have to tell you that that was a harbinger of some kind of a pullback when the VIX started to move sharply higher, even though the market was rallying. That was a great tip-off intraday. But I think it was too much too soon. And as I've said before, you've got to have bad news being accompanied by very strong, a very, very strong VIX index. They got to go together. And if they go together, that means something completely different. Oh, I just tore off something that I shouldn't have torn off. Let me have. Aha, good. Got my thirst quenched. Now, what are we looking at? We're looking at the volatility index making that pattern I call the Eiffel Tower, straight up and straight down. Goes to 58.40, and then we go to the VIX. It goes straight from the from the 11s, high 11s, to 2148, almost a double, and then it plunges down in the pattern that I call the Eiffel Tower, straight up, straight down. It looks like a capital uppercase A. But it did hold very nicely above the gap, and that gap has a high of 1312 and the next day a low of 1367. That is a good sign for the volatility index. So I'm anticipating that this consolidation should go on. Part of today, maybe we've made the day's highs. I'm not sure about that. The Dow's up 0.48. The S&P's only up 0.36. Remember, it was a way bigger discrepancy with the Dow at one point up about 68 points, and the S&P was barely up 3.75. So I'm saying to myself, got to be careful here. This is the consolidation is not quite done yet. But after all, we're looking at the SPX having made from 1737 to 1847.50. Let me type that in. 1847.50. That is a whopping move. And I can just tell you this, that if the 9-period exponential moving average of 1822 is not hit in the next 2 days, but instead of at 1835 where it is now, we can actually reach 1842 by tomorrow or Monday, that is really positive action. And then we should get leg B. And if we get a leg B above 18, I would put it this way. If there is a strong close above 1850.84 to make a leg B, or even if it's a C, I suspect we will go to at least a D in the S&P. That would take it. And yeah, this is the real issue. Don't tell me that that's a brand new leg A. A leg A, and then what we're looking at is a B and a C and a D in the weekly charts that should take us to an absolute minimum of the shortest period you can have would be 6 to 7 weeks to get to a D. If every week there was a higher high and then a lower high and then a higher high and a lower until you got to leg D. And that would take us to February, March, to sometime in March. So all I can say is I'm watching this real closely. I'm still expecting, based on the action, actually the action of GE right now, where it's down 23 cents, it's saying, be a little careful here. I'm not quite ready to break into the high 25s, or even that would get me to the 26, which is 26.20 level, which would be really positive. But until then, this has got to be a little bit careful. Okay, question in the Denko. I look at corn. This is the ETN, I believe it's called. This is the ETN. Wait a minute. Didn't I do this yesterday? And what didn't I do the notation? All right, I'll do it again. A minus. There we go. So I'm looking, folks, at corn, CORN. It is, in fact, I believe, an ETN, the Teucrium Corn Fund. And right now, it's in a buy mode that's gone to a leg D, possibly a peak D, holding very well. I would put it this way. If you're long, be a little careful, because if it's a 3220, CORN, down 0.06. If it takes out 3175, the 9-period exponential moving average after this peak D, the stochastic's only at 75%, and it hasn't confirmed this move to the upside in leg D. It is, in fact, lower than it was at peak C. So I'd be a little bit careful. In fact, I'd do two things right now. One is I need to go to the corn contract, A, C, there we go. That's actually looking way better. That's in leg E. Let's go to the contract itself, CH14. Oh, I thought I'd done these. Yeah, never know. All right. So let me just finish this up. Yeah, this is closer to the Teucrium fund. Teucrium. If I say that to my grandchildren, they'd laugh for at least half an hour. Teucrium, they'd say. Teucrium. All right, there it is. Yeah, so actually it's the same as the corn, same as the continuous contract. I like it. It's a little different to the Teucrium. So Teucrium is not the leader. It is merely following the contract, and the contract's following the continuous contract. I do like it. All I'm going to say to you is if it breaks, I don't know if you can look at the futures. If you're just trading the corn, I'm sure you're looking at one of the futures, either the March future or you're looking at the continuous contract. But if it takes out, it's at 453 and a quarter right now, down a half a point. If in fact over the next 2 days it takes out 446 and a half is the 9-period moving average. 443 and a half is going to be the really important 3/4. It will be the very important support. I suspect that it could be pulling back a little bit, but the stochastic here is at 90%, and that's very good. I like it. I would just take a little bit off if it dropped under 446. Hope that helps you. Now, if you're looking at the corn, I'll do the same thing. There, we've got the music coming up. I don't want to talk right through the music. I'll do corn when we get back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Just to answer your question, the Den, oops, that was wrong spelling, but that's okay, about Athena Health. It is a monster. Bush is the CEO there, and I can never remember his first name, but I do remember. And he has a way every once in a while of kind of misstating things a little bit to their advantage, but they are in the right area, doing the right things, electronic medical records, physical office systems, etc., and it is a monster. And I was just saying that I would like to show. We showed it once, we got out, and thank goodness the next day was huge earnings and it spiked up. It was a peaky, but it definitely accelerated above that. Wow, lucky to be out. Well, let's go back to Joe in the Den who wants to know about corn, C-O-R-N. Now, C-O-R-N is, in fact, I just typed it on the chart instead of over there in the symbol box, C-O-R-N. Yeah, the way it's acting right now, it's holding well. I would just say that if you're long, I would take a little bit off if the actual contract, the corn ETF itself is following the script of the future very well, and it pulls back, and in this case, somewhere between 31.75 and 31.58. It really needs to hold, stay there maybe a day or two, and then quickly climb back to 32.25 to 32.5. That would be good action. The weekly chart is actually in leg B. That's nice, a very strong leg, but today's Thursday. We still got tomorrow's close to go. So far, it's acting pretty darn well. All I can say is that corn has made a turn, and the weekly chart in the continuous contract says this is something to really respect. The monthly chart is just something completely separate. It's making this quadruple bottom here. 465.5 is a strong 9-period moving average resistance. And you've got all the way to 494.5 on the weekly for the 200-period moving average. This is, I don't even look at numbers like that. I like to look at the candles. I like to look at the patterns. And all I can say at 82% with stochastic and a MACD increasing. Okay, I've just changed my mind. I'm going to say to you that corn is acting very well. If it was to get to the 446.5 level in the continuous contract, maybe I should just for the moment, I know most people don't get that. So let me just go to the actual contract, the March contract. I probably should look at the June, but I'll go to March. If that March contract is able to hold as a 453.5, if it's able to hold, and then suddenly in leg E, it's suddenly, this could be B/E, it suddenly has a dip towards the 448, 446 area. I was going to say to take something off. I'm going to say something else. Give it another day or two, and if it's still holding very well, I would add to my position, and that small position should have a stop of, no, I don't know what they priced at. I don't know what happens if they drop 1 point. I don't know, it could be way too much money. I don't trade this, so I'm not sure. But all I can say is that in this particular instance, I'm looking at it and saying, I love the action. I don't really want to take a little bit off. I'd rather add to the position because it's acting so well. And then we'll see if it's able to get to the 466 in the continuous contract, in the March contract, because it's at 454. 12 points is reasonable. The other one in the 200-period moving average of the weekly was just way too high. So that's the way I would look at it. I would add to a drop of about 7 points from here, 6 to 7 points, and I would have a fairly tight stop. Maybe 2 points. I'm not sure how it works, but that's what I'd be looking at, because at 90%, that stochastic is really strong. Now, let's do a couple of things here. I wanted to go to a couple of questions here in the den that I might have missed. Just wanted to check it out. Beans, corn, that was a question. And another question I thought I saw was an email. Was it an email? Yeah, could I just follow up on my discussion yesterday on Facebook? Certainly I can. I typed it right into the den by mistake. FB. Facebook trading right now at 66.62. Remember what I said? I would start a smallish position on a pullback yesterday. I said based on the 120-minute chart, if I had notated this correctly as a B with a brand new buy signal, that's kind of questionable now. It could be FG. That's one of the issues with the Chapman wave, is that as you get to an alternate count, if you're looking at the MACD and stochastic, which are way below what they were back in the end of January, beginning of February, yet the price is much higher, that's a kind of a negative. But as long as that 9-period moving average, the black line, is acting as support, now suddenly it's resistance. So I'm going to watch Facebook. But my thinking was that Facebook on a pullback, I believe I said to the 66.5 to 65, I think I said 65.50 area. Yeah, I think I said 65 area. I'd probably say I'd want to start a little position there, but 64, the 64.47 area is really the final support in this particular move, if it's peak E, because if it breaks under 64.5, closes under that, you got to be careful that it's not going to break under that very important candle of the 13th of February. So now I hear the music, and there were another 1 or 2 questions that I meant to get to, and I have not done anything about it. So I'll find what the questions are, and I'll be right back. Now's at 56, S&P's at 5.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. Dow's pulled back a little bit. It's up 60. S&P's up 5.25. I have to tell you something. What else could you put your money in? That's really the issue now. I think that's what many people are saying. What are we supposed to do here? Interest rates are still low. That's really, to me, a big part of what I'm looking at here. There's a fundamental side that says don't just ignore the layperson who's kind of trapped in many ways, especially the ones, there are so many boomers that are saying, oh, wait a minute, you got to get something, and I need some safety. So, in that particular context, what I'm looking at is I'm looking at money filtering into the market very selectively, but it is coming in, and that to me is important. So you've got DDD 3D Systems, which just went from 97.14 a couple of months ago, just 2 months ago actually, down to 55, actually 54.63. Now it's a 79.41. Legacy up in the daily with a nice V-shaped pattern. Weekly is improving because it's over the 9-period moving average. That Roman candle at some point will be filled in. But if you close, not you, if 3D Systems, DDD trading at 79.46 up 338, if it closes this Friday, tomorrow, nicely above both the candle high, that's the 78.37 high of the week of the 7th of February, and the 9-period exponential moving average, which right now is around about 78.66. That is going to be really good action. That's the reason. Okay, the questions I'll deal with. I really don't like to do this, but I need to do it. It's a question that was asked. I always try to answer every question as honestly and straightforward as I can. So the question really is, we have Rite Aid in my opening call. We've had it a lot of times. We've made huge money on this. 166% on part of it, 60%. We've been in and out many times. I don't know if we've ever had a loss. If we've had a loss, it's been a very small loss. The latest entry point was at 553 on the 15th of January, and it's trading now almost a point high. It was actually much more than a point high this morning. Excuse me. I am trying to find these stocks that are comeback stocks. That's number one, so it's fundamental. But I'm looking for the patterns. And the pattern of this said there should be a U-shaped pattern that goes back to April of 2014 to the 674 high of June of 2007. And now what it's done is got a high today of 658. So it is almost there. So in this particular instance, what we're looking at is the U-shaped pattern that I love to look at, the Chapman Wave inside track. That's that wedge-shaped pattern that gives you the direction to the upside and time based on the highs, previous highs. It then looks at the left side, right side price time match with a particular candle. And that I drew ages ago, and it seems like that's one of the I can't say it's a foolproof at all. Nothing's foolproof. But it's one of the ways that we can activate buys and have particular GPS working for us to say, that's working, that's not working. Whoops, wrong way around. Yep, I'm going to get to the IYT in a moment. Question in the den. So this is now G slash, I don't know, it could be C or B, but it's still very positive action in the weekly price. I want to see the stochastic get above 70%. Must get to the 80%. I want to see the MACD still cross positive. So the action in the daily in leg C is very helpful. This is very nice. We were fortunate yesterday at the very low of the day to be able to buy Alcoa. Yesterday's low was 1134, I think. Let me just double check. 1134. I said to buy it under 1136. We bought 1135. It's trading. It had a spectacular day when the market was down sharply. It hit 12, round number high. I don't like the round number high, except I don't mind it if it's way above the previous high, which was 1232. So now we're in this position where I'm saying we're building positions in longs that have the potential. Look at the cup formation once again here. And it says this bar, this very ugly candle of September of 2011 at 1288. That in some way looks like a target to the upside, besides which there was a Roman candle the month before, August of 2011. And that's saying, hey, wait a minute. You broke down just like you're supposed to normally do if you go to halfway into the wick of that Roman candle, Chapman Wave Roman candle. And if you do that, be careful. But at some point, it becomes a magnet on the back on the upside. So the body of this candle, which takes you to about the middle there, which is up at 13.87, says at some time, doesn't give you a time, but at some point in the future, that mid-13s should become a target to the upside. Closer to home, 1232 is a peak E, unless it's been recycled. But in the meantime, the 200-period moving average, which it just ignored for, let me squeeze this chart. This is Alcoa, AA trading 1177 up 1. It ignored since it broke down. I can't even find when it broke down. It broke down. It just, unbelievable. It nicked it. Look at this. It nicked it right there in April of 2011. But you need to go back further. You need to go back to 2008, August of 2008, when it was at 3270, when it broke down. Look how long it can sometimes take a major stock to be able to break and close, as it has now done, above that very important 200-period exponential moving average. And what happened? It couldn't take the strain. It went to 1232. That is at 1146, that line, that golden line, pinky golden line. And look what happens. it pulls back under it. That becomes a fulcrum. You go up it, you go below it, you go up again, and now 1146 is really important support. So I keep saying to subscribers, I'm not sure why or how, but there are so many positives to this market. I don't want to be fooled into suddenly going short, over short. You can do it on a quick basis. And I nearly went short yesterday at the open, but I thought I don't really want to play that game. I'm looking at too many buys. So there's no signal yet in Alcoa to say that it will break above yesterday's high of 12. But at 1188, if it's able to even touch 1188, that's really important. It will go higher and try to test that 12 level. So now that's the one thing. When I'm looking at, I want you to do, I guess I will. No, I'm going to stop there with the positions that we have. It isn't that I'm superstitious about it. What really happens is that there's a hubris that if you start to pat yourself on the back, those little trading guards turn around and say, "Oh, we heard that," and they tend to give you a little smack on the nose. So now what's very important, I had a question then about the IYT. IYT is the iShares Transportation Index. And what's really important about that is that if you want, you can say, here's a signal. It made the daily IYT, made a peak F top in the Chapman wave at 135.93. That was way back in the 23rd of January. It's pulled back sharply since then. It's gone to a peak C, which might turn into a peak C minus. Remember, a peak C minus, meaning that it's failing, is very negative, and you're going to test the bottom at 125.70 if that happens. Most importantly is that the weekly chart has pulled back. It's under the 9 EMA, and what's nice about what I'm looking at is it's just a high-level consolidation at this time, as is the monthly chart. So I'm going to come back to that. We've got a caller from Orlando, Florida. We've got Rich. Hi, Rich. How are you?
Good, Basil. And yourself?
Very well, thank you. You'd like to look at?
The ERY, which would be the short on the oil sector?
Yes. So, of course, I had this all notated. I probably have to, I've got it. I had it notated, and I haven't actually looked, not anyone's fault. I just haven't updated it. CD, remember what we like to look for? D's and E's for tops. Folks, this is the energy bear 3 times shares. In other words, if the XLE goes up, this should go down, and this will go down in a proportion that says on a percentage basis. It isn't exactly like that, but it should be 3 times, and right now it's down 2%. And just to explain exactly how this works a little bit, the XLE is up 0.70. So 3 times, I guess it's close. So we're looking at leg C in the XLE. Now, I needed to ask you, do you have a position in this?
I do. I'm in at 22, and so I'm underwater a little bit here. I don't know if it tested the bottom yesterday with that high volume. And so my real question is, I know you seem to be kind of still positive on the market itself, but the energy section looks to me like a lot of those stocks are kind of topping out and looking like they're ready to kind of make a correction anyway. But I don't know.
So let's do this. I'm just, if you don't mind, I know you will also be looking at the do you use the XLE as your benchmark?
Yes, I do.
Okay. So I've got it in leg C. Fabulous action today. There is the stochastics at 93%. The MACD is good. I had a caller just a few days ago who was looking at the SMHs, and he wanted to short. And he's a really good trader, and he's able to manage the trades really well. He gets out of his wrong really quickly and all. But I had said to him, the SMHs, the semiconductor index, looks so strong, I would not be looking to short. I'd be looking to buy on a pullback. And I have to tell you something. I'm going to draw. Are you looking at Tiger TV?
Yes.
If I draw this, I'm going to show you something, and I know that if you listen to my show, you know that there are certain patterns that I look at very intently. One is the Chapman wave falling axis. That's where you've got a move to the upside and then lower highs and much lower lows. And that's exactly what it did. But then it broke out above on the XLE broke out above on the 14th of February, went to 86.20. At 86.20, that was good, but the next two bars were even better. And today, the third bar is even stronger with a stochastic at 93. You don't have to do it right away, but if you're asking my opinion, I would get out of that immediately, and I'd be looking at the long side, even if it just goes to a leg D tomorrow at above 87.41. If it does that, this particular pattern very often has a one-to-one acceleration to the upside, which says that the 88.54 high that was made, let me just check, is that an all-time? I can't believe I'm looking at this. Yeah, the 88.54 high was not the all-time high, but it's a new recovery high since May of 2008, where it went to 91.42. If you're asking my opinion, I'm going to say it's not the trade that I would hold. Even if it does turn around and bounces a little bit here, I'm looking for at least a D, but the MACD, strong. The histogram, strong. The stochastic, 93%, strong. If that continues to hold steady like that, if it flattens out in the 90% area, XLE is going to test. It's at 87.14. It's going to test and probably break 88.54. Even though it's in leg C, we might only get a D. Last time it failed at an E. But you're asking my opinion? That's my opinion. And let me just quickly look at the 120-minute chart. Oh, it's above the 200 EMA. No, I don't see this as a short just yet. Maybe next week I'll see it, but I don't see it right now.
Okay. So then, all right, well, I mean, it is what it is. Okay. Listen, I appreciate it very much. Thank you.
Okay. Sorry that wasn't what you wanted to hear, Rich, but I got to tell it like I see.
You said, the thing that kind of threw me off is that the underlying stocks all look like they're really, it's like you got Occidental.
All right, I tell you what, if Dan and Baskin Rich doesn't mind holding, just throw out a couple of names. You've got COP, right?
Correct. COP, Occidental, SLB, Schlumberger is the heaviest weighting. Occidental, COP.
Yeah. When you get Chevron rallying like this and filling in the gap and holding well, and yesterday actually having a decent candle, I like what I see. I think it can go a little higher. It's at 115.10. 116.37 is going to be the resistance. So I'm saying I'd be a little careful because we could run up higher for maybe into early next week. And I could always be wrong, but that's what I'm looking at right now. So what I'd like you to do is just think. You don't have to jump in right now, but I'd look at it and I'd say, okay, where would be a stop? Where would be a good place to put a stop and say, if it goes that high, I'm out of here. That's the XLE. Or you can do it on the ERY. So I hope that helps you, Rich.
Yeah, as far as the stop on the bottom, would you say the 2037, the bottom yesterday?
On the bottom, I tell you what I would do. It's close. So this is a tough one. Yeah, 2037. Okay, it's only 20 cents. Yeah, if it goes under 2037, I'd say yes. Even though it's getting to a point where it looks like it could bounce, I don't really want to be playing the wrong side of the trend. Because at 6%, the stochastic can remain low for a while, and it made a peak E at the top. So all I can say is that if asking my opinion, I'd cut loose and I say, you know what, I'm going to keep that money. I'll be able to get a much better entrance maybe next week, but right now I'm still looking at it as being strong. Hope that helps you.
Appreciate it very much. Thank you, Biz.
Thank you so much for calling, Richard in Orlando. Let's go to Dan and Baskin Rich. Hi, Dan. How are you?
I'm doing okay, Basil.
You'd like to look at?
Great Panther.
All right, GPL, which was just a monster on the downside, and is now turning into a monster on the upside. Do you have a position?
No, I'm out.
Okay. All right, let's look at it, because it's a good-looking stock now, much better than it was. I'll be right back with Dan straight off.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. We're back, and the Dow's up 65, and the S&P's up 6, so not they're coming more into alignment, but, in fact, just having moved higher today instead of being down 65 and down 6 in the S&P, actually, if it was down, it would be more like 7 or 8 points on the S&P. It's really a big positive as far as I'm concerned. It's making a high-level consolidation. Let me just quickly do. We've got Dan from Basket Ridge on the line. We're looking at GPL, so I want to get that done. Then I'll do a market overview. What I'm looking at is that GPL finally got to a leg B in the monthly chart at 1.38. That was very important. There's an alternate wave count that could have been counted, but in fact I decided not to do anything like it, keep it as strict as possible, and it's gone A, B, C, D to the upside once, and then it pulled back very sharply from 0.65. It went last time to 134. That was in August of 2013. Plunges down to the 0.66 level, double bottom, starts a new A to B to C to D in another soft W formation. That's 2 U's. And now what it does, it looks like it very much wants to get to the 147. So, Dan, this is what I'm getting. You don't have a position, right?
Now, you had suggested I get back in at like $1.10, which if I would have had a limit, it would have been filled. But I was really concerned with how much and how fast it came down 2 days ago.
Yeah, I would have been too. I was watching that. The only thing about because you had asked me, but the only thing about it that I loved was that it was peak C. The alternate count, I'm giving the favorite. I'm favoring peak C, and it should go to D, which should be above 138. So that would have been just a perfect entry point because your risk would have been down to the 105 area. That if it closed under 105. Then I'd say, all right, now you've got to be real careful. But if it held the 9-period moving average, which in fact it did, this is good. Now what do? I tell you what I would do. You've only really missed, sounds like a lot because it's a big percentage, but you've missed about 12 points or so. That's 12 cents. I'm going to make the suggestion here that as a trade, because the 200-period moving average is at 147, and it looks like it really wants to try for that for the very first time since it broke down since 2012. I'm going to suggest you buy a much smaller position than you would have had at, I would like to say, below 124. I'd like to say between 122 and 120. The only problem is this is the move that needs to climb quickly to a leg D. I don't want to see it hang around now because if it starts to stall and then makes a high of only 120 and then the next day a high of only 118, it will come down to the 111 level again. So if you are prepared, if you're following it, you're looking at it closely, a small bit more as an experiment than anything else. So keep your stop quite tight. I would not have more than like a 6-cent stop on this stock. But I nibble here, and I'll tell you why. Because if it starts to move higher, I would add to that position another small position, also with a fairly tight stop. Because the moment it takes out 138, it's going to try its very best to get to the 140s, and if it gets to 140s, 147 becomes the target. So my parameters are 147 on the upside. That's what I'm looking at, looking out. I'm not giving you a time, but I was suggest that it's probably within 2 weeks. That could be much quicker, but that's what I'm looking at. The other thing is, if you're looking at the downside, another break towards the 112 level, and I won't say to you, get in at that point, because I need to see how it bases, especially if it doesn't go above peak C. Hope that helps you.
Thank you much.
Okay, thanks so much for calling. Folks, let's just go through these things again. I'm putting a lot of emphasis once again on the volatility index. But in the meantime, let me just give you the Dow parameters. Nice move here. The Dow is in leg B in the daily chart. It bounced off exactly the 9-period exponential moving average. I love what I'm looking at. I don't want to see the Dow close below this candle. I don't want to see the Dow close below 15,930 to 15,920. That should be really good support. On the upside, I'd love a close by Friday afternoon above 16,150. Stay tuned for Larry Pesavento, and I'll be back tomorrow. Have a great day.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This is TFNN.